A very good evening, distinguished guests, ladies and gentlemen. Xin chào. I hope I pronounced it correctly. And I want to first thank MPOC and MPOB for inviting me to come and speak here in Vietnam. I've been here actually, I think about 4 or 5 years ago, to provide training to the equity market professionals. You know, and when I was here, the stock market was actually at the peak. And after I left, provided training, the stock market actually crashed. So I hope that the farm market will not crash after I did this presentation. But it'll be interesting because I'll be taking a look at the price outlook for crude palm oil futures prices in Malaysian ringgit. I'm looking at the futures market based on the Malaysian or the Bursa Malaysia Derivatives Exchange. Basically, people always refer me to as the man with the crystal ball, right? Trying to look at where the price direction is probably going to move. Now, I have to say that I don't have all the answers. Right? I can't predict the market all the time, but I use it basically as a tool to manage my trades. And I hope that my presentation today will also benefit you if you in your trading strategy, if you're trading crude palm oil. Mr. Tony Cole earlier already mentioned to you how you can do various strategies about hedging and in the futures market for your palm oil trading. I do not really trade physical palm oil. I trade paper contracts, which is the futures market. And I find that the commodities market is easier to predict and forecast than the equities market. Because we have cycles, we have the demand and supply, which is quite consistent year after year. So for me, I made most of my trades on the palm oil futures in Bursa Malaysia, because it's one of the most liquid, most volatile markets that you can find in the commodity market. So, and my analysis and forecast is basically just based on technical analysis, which is chart analysis. Now, why chart analysis? We have to look at demand and supply and all these other fundamental data, but when I trade, I make my trading decisions based on charts. And the reason why I look at charts is not to understand, look at all these indicators, all these technical jargons, all these indicators, but to me is to understand what the market players are thinking in the market. Because whenever any player starts to make a trading decision, the prices will be reflected on the chart. So I'm trying to basically understand the psychological aspect of those who are trading in the futures market. Right? And if you learn about technical analysis or chart analysis, you can basically apply these in any commodities market or equities market. So I'm just going to basically share with you what is my personal price outlook for palm oil futures for the next 2 quarters. Now, I'm not going to bore you with all the charts, all right, because I think you will fall asleep. I'm just going to make a summary and later conclusion, so I hope I can end my presentation in 10 minutes time. Now this is how a chart looks like, and this is how volatile CPO prices can move. But for the past 8 months or so, since September, if you look at the chart, since September until today, price has been moving sideways. It's been correcting sideways between 2,200 ringgit to about 2,500 ringgit. Right? And that is after a steep correction or major correction in the year 2012 when price was trading at about 3,800 ringgit. Price has been in a downtrend technically since May 2012, and it's currently near the long-term average. It's a 200-day average. It's always used as a long-term average. So it's now testing above this level. It has actually increased, went above the 200-day moving average, and then it starts to pull back again. These prices here is based on prices about 2 weeks ago, because I prepared the presentation slide 2 weeks ago. In the longer term, if you look at the sideways range I just mentioned, so you see that price is basically trading within the support and resistance level between 2,220 to 2,550. So if you look at the price 2 weeks ago, it's at 2,459, which is pretty much close to the resistance level. If you look at the shorter term, okay, since early May, we see price has started to move higher. So in the short-term trend, it's basically moving upwards. In the long-term trend, it's still in a downward trend. Now I'm going to go into a longer term analysis now. Here what I'm looking at is a weekly chart. So one line that you see on the chart represents 1 week of trade. Right? And if you look at the price of crude palm oil since 2011, in 2011, early 2011, it reached about 4,000 ringgit per metric ton. And it went to a correction, and year 2012, there's another bullish rally that pushed it to about 3,008. And after these two peaks, the market started to pull back and now start to go sideways. That's because, in any commodities market, when prices are high, right? And in 2008, we also have another rally I'll show you later on. But when prices are high, everybody wants to get into the business. So everybody starts to plant palm oil. Right? In Malaysia, there are a lot of, we used to have rubber and palm oil, but everybody, most of the players start to cut their rubber trees and start to plant palm oil, because that was the opportunity, right? And because of that, today we have an oversupply, right? And that's the reason why you see prices are now trading at about 2,000 ringgit level. But we are thankful because price will not fall below 2,000 ringgit. It may happen, it may not happen. We'll just take a look at the prices. My outlook later on. So again, it's all very technical, but if you are a practitioner of technical analysis, if you look at the correction here since the 4,000 ringgit level, we should see the bottom at about 2002, right? And we have seen price trading around 2002. Okay, this is a very simple, we call this the Elliott wave technique, right? When we have an ABC or a zigzag correction, okay, the distance between O and A is the same with B and C. So C, based on Elliott wave, is at 2,300. And in Elliott wave as well, in a major correction, we always have an ABCDE pattern. Again, this is technical, right? But once it reaches E, once the correction is over, then we'll expect a breakout. Means that the trend will probably start anytime soon. But the only question now is this trend going to be an uptrend or a downtrend? Now this is a longer term chart, so this is a chart since 1997. Okay, 1997 is the year when I started trading the CPO futures contract. And in 1997, price was about 2005, so we are back now at the price level now is at about 1997 levels. That's before the Asian financial crisis. And we went down to about 700 ringgit per metric ton in 2001 before we see a really nice bullish rally, right? And you look at 2007, 2008, price has actually gone nearly as high as 4,400 ringgit per metric ton, and then it fell steeply. It fell down quite steeply here. It went down to 1,005, and in 2008, I still remember that everybody is screaming because price is so low. It's nearly cost price. Right? But then it rebounded quite aggressively as well. So if you look at the CPO market, the reason why a lot of traders like to trade this market is because we have these volatile movements, right? And there are lots of money to be made with this kind of volatile movements. You don't see this in the stock market, right? You can only see this in the futures market. So palm oil is one of the most volatile markets. So since 2008, it started to move again, and now it has started to pull back again. And the line that you see on the chart now is called the 15-year linear regression. It's an average line. So, of course, in the long term, the prices are currently below the average, right, based on the current trend. So, in other words, price is quite cheap, right, for palm oil. The bottom line shows you the bottom level of the average line. And you can see at current prices, we are near at these bottom levels. And the top line is the resistance level. And we can only have prices moving to these levels if you really have a really good demand, very bullish price for CPO. But if you look at the current price, we're trading at about 2004, 2005. It's near the bottom level of the linear regression level. So based on the analysis I gave you earlier, I would expect that price have really probably bottomed out at about 2002 to 2003 this year. But then again, there's always a possibility of it going lower, so we'll take a look at that possibility later on when I make a conclusion. I will look at a few support levels to basically tell me, I need to convince myself that actually 2003 or 2002 ringgit is the bottom. Right, so I'm going to apply a few more indicators here, like these Fibonacci tools, to find out whether 2003 or 2002 is the bottom for this year. Okay? So again, based on technical analysis, when the price retraces from the bull trend in 2009, about 61.8%, it may start to rebound from that level. So it's at the last level of support. Because if it's not supported at this level, then we may expect price to go much lower. Okay, it was also a 2010 year 2010 support level. So all these, the current price shows these few support levels technically. And if you draw a downtrend channel, okay, based on the 2011 trend until today, which is a downtrend in the long term, okay, price is also near the bottom line of the trend channel. There's just too many lines here, I'm just going to skip this one here. Now, one other thing that we're going to do in technical analysis is to find patterns historically, right, to determine and to use that historical pattern and see whether it fits to the current price. Right, what I've discovered so far is that, of course, when price peak, when it goes really high, okay, and after a few years, it will go into a correction. That means it has to come down. When you have too much stocks in the market, the stocks have to move, and when the stock starts to lower down, then price can start to move again when demand comes. So if you look at the year 1997 and year 2003, we have these two peaks here. Right? This was high at that time. In year 2000, when the price was at 2005, when the price was at 2000 ringgit, it was considered quite high, right, at that point of time. And once we have these two peaks here, the market actually moved into a correction. Quite a long-term correction actually. It's about 2 years of price moving sideways. And so it moves at 2 years sideways before, again, demand starts to increase, and we all know that China has opened up because of the Olympics and all that in 2008. Then demand starts to increase a lot, and price starts to go up to about 4,000 ringgit. And of course, when prices go up so fast, it goes up fast, it can come down fast as well. This is how it works. If it goes up steadily, then everybody is more happy probably. But this is and markets sometimes can be over-speculated. When everybody jumps in the bandwagon, the bus gets very heavy, and then everyone starts to fall off. Right? So this is the analogy in trying to explain the psychological aspect of the market. So if you look at the current trend, okay, we have two peaks here as well, in 2008 and in 2011, which is about 4,000 ringgit. Right? And now what we have is a correction. And if you remember, in year 1997 and year 2004, when we have these two peaks, the market moved into a 2-year correction. So the question is, are we also going to move into a 2-year correction before price starts to come back again? I know this may not be a good news for the palm oil players, but again, we may expect the price to move into a correction. So if you look at this period here, right, from this bottom here to this top here, okay, this period here is actually exactly the same period in 2001 to 2004. Okay, so it's about a 4 years period. Okay. And in 2008 bottom to 2012, this is also about a 4-year cycle. Okay. And after that 4-year cycle, then we have this correction over here. And if I use the same time frame, right, and look at today's price, you'll see that there's still there's still some room for price to move sideways before it starts to rebound or move into a trend. So based on this calculation alone, based on this exact calculation, based on the previous historical price movement, we are looking at, we still have about 7 to 8 months more of correction, right, based on that previous 2-year correction. So at the end of the correction period is at least somewhere between January to February 2014, next year. So if you look at just this alone, I would expect price to move sideways the whole of this year, before we see price start to move again. The question now is the 2,300 level is the bottom. Are we going to see price going lower? Okay, now this one, I think I'll leave it to Mr. Thomas Milky to explain you the demand and supply part. But based on the charts, okay, because in palm oil product, this is the output for palm oil, production of palm oil in Malaysia, right? And if you look at the month of August, September, October, is always the high output month for Malaysian palm oil. So we're going to expect palm oil, production of palm oil to increase in the next 1 quarter or so, probably until the end of the year, and it starts to cool down again. You will probably, based on again this average here, it's probably going to go to about 1.6 million tons, right, in the next 2 months. For exports, also we're probably going to expect an increase as well, because normally, again, the exports also start to increase in the middle of the year. If you look at the increase, the possible increase in exports, is compared to the possible increase of the palm or the production of palm oil, we're going to expect a lower margin for exports as compared to production of palm oil. So we may see palm oil inventory starting to decline for the past few months. This is the palm oil inventory. Right? We have reached quite high levels here, 2.6 million tons, late last year, and it's come down back to 1.8 million tons. So, based on the production figures and the export figures, I will not expect the inventory to go lower unless somebody takes other measures to decrease the inventory. I do not see any possibility that it can go lower at 1.7 million tons or so, because if it does go to 1.7 million tons, we are looking at very low levels. So, in the next few months, I will expect the inventory for palm oil to start to increase again. So, and we know that if the stockpile is higher, then price will be pressured. You can't sell when there's too much supply, the price can go up. Okay, so this is the relationship between the stock, the inventory, the output, and the export. So if you look at this part here, currently the reason why we see a decline in inventory is because you see the exports has actually grown a little bit higher than the output or the production of palm oil. Okay? But every middle of the year, you can see there's a cross between the production and the export. Right? Which means that the production is going to be higher than export figures, and it normally gets much higher than export figures, and that's when we see the inventory starts to go up again. Right? So and this is what we're expecting at least for the next one quarter. Okay. So based on this analysis, based on technical analysis that I just showed you, we're expecting price to go sideways because of this correction period for 2 years. And if you look at the output figures for palm oil and the export figures for palm oil, this will also pressure price from actually moving higher. So we may see price being pressured at least in the next 2 quarters. In other words, since we're already half of the year, we're going to expect price to be pressured until the end of the year. Now this is the relationship between soybean oil and crude palm oil. Now, if you look at the relationship between these two, we have seen that these two has decoupled in year 2012. They don't really follow anymore. Soy oil prices have been trading at premium against the palm oil prices for quite some time today. And we are actually expecting crude palm oil prices to come back and go back to the soy oil level prices, or the soy oil prices to come down, but it has never done so for the past at least 2 years. So we can't really use the soy oil prices to gauge palm oil prices. Okay, one of the other market that you can look at is probably crude oil, because it has certain correlation, but not as high as if you look at this. In September last year, you can see that these two prices has also started to separate. Oil prices have started to rebound and started to go up quite strongly, but palm oil prices started to go down. Right? And like I said, this is because we have really high inventory or high stock, and that's the reason why price can go up. But the good thing about this is if commodities prices remain high, right, and palm oil prices has been pressured for now nearly a year, once it starts to move, it can move really, really high. Right? So, but we only probably going to expect this probably at the end of this year or maybe early next year when the correction period is over. Okay, so basically, I'm going to end my presentation. The forecast for CPO prices, I'm going to expect it to trade between 2003 to 2006 this year. For the next quarter, price is probably going to stay around 2003. It can range between 2002 to 2003, around that levels. But I would expect price to at least start to move up towards the end of the year. Right? And I'll probably expect price to move even if it goes at highest this year, it's about 2006. Right? And like I've mentioned to you earlier, I do not expect price to move into a nice big trend to go 3,000 or 4,000 ringgit probably until next year. Right? So average price, if you look for the past 1 year, based on the moving average I just showed you on the chart, it's going to be around 2006 for this year. So it's a bit lower than last year's average price, about 2008 or 2009. Right? So that's basically my forecast. And for every forecast, there's always a validity. Right? Because I'm not expecting price to go below 2,250 ringgit per metric ton. And if the price does go down below 2,250 ringgit, then you have to email me and ask what's my next forecast. Because I'm not prepared, and then you have to look at the current data and see what happens. But I'm very confident that we probably see the bottom. Price is just going to go sideways for some time before it starts to move again early next year. Right? So that's all my presentation. Thank you very much. If you want to contact me, you can contact me in my email here. That's my contact number. If you want to ask anything about technical analysis of palm oil futures trading, in fact, I do not trade palm oil futures, but I have a partner who trades. We actually buy and sell gold and silver in Malaysia. Right? And we also do the hedging strategies through the futures market, because my partner sells gold, physical gold, and he has been losing a lot of money, right? Okay, because he's been buying stock and he has to sell, he's buying silver and the gold price when it was 1,500, 1,600. But the good thing about having a futures market is because I went short on gold and silver, so whatever losses that we have made, right, in the gold physical that we have made it back in the futures market. That's what hedging is all about, and I hope that you can use this also for hedging the palm oil futures market, palm oil physical trading that you're doing. So thank you very much. Singkaman.